Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Friday, April 28th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here as always with Joel Elconin and Dennis Dick. Another earnings palooza, bonanza, whatever you want to call it today. We have Google, Amazon, Microsoft, Intel, Starbucks, Sarepta, GoPro, Expedia, Baidu, GM, Exxon UBS. So we're trying to get to as many earnings stocks as we can. Of course, if there's one you want us to get to, put it in the chat, and we will definitely get to it. Our guest today will be at 8:35. She's Michelle Krebs, senior analyst at AutoTrader. Will be able to talk us through the auto stocks as they report this earnings season. Joel, how are we doing in the S&Ps right now?
Basically flat, quiet range overnight. We matched yesterday's high at 88.75. That's a big number on the upside. Only 83.5 low. That's just below your daily pivot. So we'll see what happens here. Tight range overnight. We should surely get some action off the opening bell. Crude continues its yo-yo trading here, up 52 cents. Taking a look at crude, dipped under $49 yesterday, $48.20. Nice rebound, maybe just going back to that $50 level. A couple highs over 50 earlier in the week. Gold and silver are going the same way today. You have gold trading up 270 at 1268.60. Not a lot of movement over the last few days. Great support here at 1260, maybe getting ready for another push to 1300. And then, as I mentioned, silver up 7 cents here at 1740. Let's take a quick look at the silver chart, and you can see double bottom at 17 1/4. Dennis, I think yesterday may have been the busiest after-hours earnings session of the year. I mean, you had some big guns reporting.
It was so many big guns reporting. Amazon, Intel, Microsoft, Google, Starbucks, Baidu, Expedia, GoPro, First Solar, your Western Digital blowing it out. You had so many guns reporting. And then this morning, Exxon and Chevron and General Motors. We are in the heart of earnings season here, and where do you want to start? Why don't we start with your winner, WDC?
Okay, all right.
I want to start with Western Digital because here is a classic example of what we've been talking about. And what we've been talking about for the last week and a half is sympathy has not been working. Seagate gets murdered. WDC and Seagate are people pair trade these things together. So guaranteed, you probably saw quite a few pair traders, even yesterday, hitting WDC on the STX report. By the end of the day, WDC was already trading higher, maybe tipping you off that they weren't going to miss. They actually knocked the stock down on the initial earnings report, and then they started buying and they started catching a bid, and the stock is now up 7 points. So here you look at Seagate, WDC, Seagate falling 8 points, WDC going up 7 points. It's a 15-point blowout in pair trader land. So This has been happening this entire earnings season where you're seeing like stock like Mattel get killed, stock like Hasbro rally like crazy. So sympathy has been tough. I mean, we saw U.S. Steel too. U.S. Steel murdered. All the other steel stocks opened down. By the end of the day, they're all higher. So sympathy has been a tough trade here. Spencer, give us the details. Western Digital.
WDC reported Q3 adjusted EPS of $2.39 versus $2.14 estimate. Sales of 4.6 versus 4.57 billion. So they beat those numbers. They did guide on the conference call. They see Q4 EPS at $2.55 to $2.65. The estimate was down at $2.13, so they blew that one away. And the sales of the guiding is $4.8 billion versus a $4.6 billion estimate.
And I think that's really, the catalyst there, because if you look at the after hours trading, and Joel will show you that chart there right now, stock was beat up. The stock was trading down actually $2-3 there. And it wasn't even just like a little blip down there. It traded down there for a while. And then, they turn around, and then on the conference call, I think with that huge guidance, it caught the bid. It blasted off into orbit. And so it was the guidance. And like we said with the algorithm, guidance is more important than the current earnings report.
Do we have time to go into the old pairs trading at all? Just how people get destroyed on something like this, the Seagate and the Western Digital, because that spread is what? How many standard deviations out
Oh,
now?
it just blew out. And
Yeah,
people, if you look at the two charts on a daily, Western Digital, Seagate, very close to looking the same until this earnings report. Now Seagate is back down to where it was trading in January. Western Digital is trading 24 points higher than where it was trading in January. And if you look just 2 days ago, these things were in line. Now they're 24 points out. Some pair traders say that's a great opportunity. Maybe it is, but it could be more heat with it before it comes back in, and it may not come back in. And we just don't know. Just because companies are related, just because they're pair traded, doesn't mean a fundamental event can't take them the opposite direction. And sometimes I think it's not even about the earnings; it's just about giving the max pain out there. And we've been talking this earnings season. Traders who have been playing, sympathy, taking, from the first company to report and saying, oh, well, this company blew it away, this company's going to blow it away too, has not been the case. Sympathy has been a very tough play in this earnings season.
Yeah, I'll just give you a pre-market high of 94.32. We've backed off, still holding over $93 and 93.20. Just see if you can get that pre-market high, if you can take that. I mean, really the only thing you can use besides that is half and whole numbers. Going back on the monthly charts, I have to go back to June of 2015 when the stock hit 98.19. I mean, triple digits. I mean, this thing could go anywhere, but already up quite a bit. 94.32 pre-market high. That's my single number in Western Digital.
All right, let's get to the real big guns here. Let's go to Amazon last night. We'll go Amazon, then Google, then Microsoft and Intel. But Amazon here reporting earnings. Spencer, this is a new all-time high for the stock, assuming Amazon said a lot of good things on their report.
A buck 48 on the EPS, which beat the estimate by 35 cents. Sales of 35.7 billion, which beat the estimate by $400 million. And they see Q2 sales at 35 and a quarter to 37 and $3/4 billion. That is right in line with the $36.8 billion estimate.
This company sells things. $36 billion. They sell things, folks. Anyway, stock trading up 30 points here in the pre-market. We're up at 950. You were talking the options, Joel. Repeat what you were saying.
Yeah, I looked at
show.
I just looked at the just for kicks. I looked at the 950 call, right? So you're thinking, oh, I'm gonna go out of the money. This closed at 918.38. I buy the 950 call, 940 call. I'm in the money, right? I'm looking good. If you bought that 950 call on the close at 950.20, you are down $6.80. As it is, I mean, we'll see what happens during in the regular session.
It might have some time value still because they have the rest of the day. But basically, this is what we've been saying for a long time. It is a difficult game to make money buying options. All of our good options traders that we have on the show seem to be sellers of options. Nick Shaheen, seller of premium, because time is on your side when you're a seller of premium here. So you're exactly right, Joe. So here you are, Amazon. You bought the 950 calls. You call it right. The stock goes up 30 points here. Yet you paid. What did you pay for it at the close yesterday?
$7.
Call?
$7.
$7. Stock's at 950 and a half. So intrinsic value to this thing is only 50 cents right now. So you're still losing money. You get the call even right. You pick the direction right. You get the thing to go up 30 points in your favor, and you still might not make money. That's how difficult it is buying options. Great example.
Yeah, Matty G's talking about you could have done a spread on it too. I guess that
Better way to do it.
Yeah, I mean, if you would have went to 930 to 940 or something like that. The only other way to trade those is, let's say, you bought 10 calls, man. When it goes over 950, and I think that's the reason you have, people cut, the stock coming in a little bit, is, you can sell. You can sell against that. So you sell at 952, 953. You just scale up, and obviously you would have got taken out as it went all the way to 965. Then you got a free look on the downside, but that's a little bit more sophisticated trading at 965. Go ahead, Dennis. You want to comment on that?
I was going to say that's exactly how when I used to buy options and trade options a little more actively, and I'm not an options trader anymore, and I was never heavy into options, but I used to dabble quite a bit a decade ago when premiums weren't crazy. And actually premiums are pretty low now too, so it might be time to start dabbling here again. But back in 2004, 2005, the VIX is pretty low too, similar to this environment. I don't know on Amazon if the premiums are never crazy, but there may be some other stocks. But one way to play those things, and you've got to have capital to be able to do this. That's the downside. Is if you've got a $10,000 account, you can't do much because you can't even sell the stock against your call. But if you have the ability to do that, sometimes the best thing to do is after hours when you get the huge pop is to actually sell the stock against your call. And now you've locked in your gain. If the stock, well, how high do we get on Amazon after hours?
965.
965. Or so let's say you sold at 960. Okay, well now I've locked in 10 points. So I know that I'm going to make money on that call, but now I have a free look at the downside. So if the stock starts falling under 950, I don't have to execute my call. Nope. I can just, ride my short out too. So it's really good to play the reversals that way. And I've made some big money playing the reversals and options by selling the option against my call, or selling the stock against my call, or buying the stock against my put. Locking in the gain, but giving you a free look if you're still in volatile times and in the price discovery. And sometimes it can work. It can shop around. You can do it a few times. I love playing the options that way. Very few people do it because it does take significant amount of capital to do it. And it is a little bit more sophisticated too. But it's one way to play it. If you are an option buyer, consider looking at selling the stock against your options. Or selling stock against your call, or buying the stock against your put, because sometimes that works out too. But I'll say, the best strategies I think still are writing options.
Yeah, we've pounded the table on that. 950. I mean, that's a magnet here. Traded really 950 and 955 over the last hour. So pick your poison. I just think if you get a little dip, there's been a lot of support in the issue based at the 15-minute chart at 947.50, but that's a weak number there.
Okay, jumping over to the other big report last night. Probably we should look at the options on this one too, but Google. We'll go to Google, G-O-O-G-L. Give us the numbers, Spencer. This is a new all-time high for Google. I do own this one in my investment portfolio. It's one of those I can still call it a gross / value stock. It fits my criterion because the PE isn't astronomical on it. I'm pretty happy about it this morning, though. It's trading up 38 points, helped my portfolio out. Spencer, how'd Google do?
GAAP EPS of $7.73, which beat by 33 cents. Sales at $24.75 million, which beat by $530 million. So beat on the top, beat on the bottom. Q1 sales, excluding traffic acquisition costs, came in at $20.12 billion.
Stock up 38 points. Joel, do you have any?
This one you could have you had a little bit more of a shot here to make some money.
Did you?
Yeah, based on the where we're trading right now at let's call it 9.10. You could have been a purchaser of the $900 call for $4.40. So essentially, that would be a doubler here if you are selling it anywhere over 909. So that one gave you a shot. But I mean, what were you doing here? I mean, it went off the board yesterday. Where did the Googster close? Closed well under $900. Closed it boom.
$891.
$891. So yeah, you would have. Well, I'm looking at the Goog. I'm not looking at DL. So so it closed at $874. So you would have been going $25 out of the money, paying $4. A little better chance there to make some money in the Google. Now over the critical number of 900. Pre-market high 918. Don't know if we're going to see that again. Just finding a home over the last hour at 910. Just keep an eye on that pre-market high of 918. And for you GOOG L traders, pre-market high up at 938. All one. Whole numbers coming into play once again.
And you pick your poison because the high-frequency arbitrage traders will keep that spread pretty much in line. They're very quick at it. I used to actually I used to do this manually back in 1999, 2000, 2001. Remember my Viacom, Joel? I used to do VIA versus VIAB.
That's all you used to do.
That's all I used to do. 2003, 2004, that's all I traded was VIA versus VIAB. I traded all day. I did 10% of the volume on VIA almost every day. So basically, if you were trading VIA in 2004, there was a 1 in 10 chance that you bought or sold it from me. So I was sitting there, and I think there was 2 or 3 other guys at Bright doing it too. We were probably doing 30 or 40% of the volume on VIA was just back then, and it worked well. But high frequency trading, basically, has come and evolved, and replaced, our human market making tactics there, and and you can write some automation to do it, but it's difficult to compete with the big guns, especially obviously those that have payment for order flow arrangements and get order flow directly from retail brokers. It's a difficult game to compete with the top dogs now. So I don't do it anymore, but their Google is one that the machines have got control of. And if you're a small retail investor, that's actually good news for you because they keep the prices very, very efficient.
All right, 938.01 now is a high in Google. Al, let's just keep going. Another stock that got
Microsoft.
Mr. Softy.
Q1
and buy the dip works on this one here too.
Woo-hoo.
Spencer, details.
Q1 adjusted EPS of 73 cents, which beat by 3 cents. Sales in line at $23.6 billion.
And the stock here is trading up now. Its thing got the beats on the earnings report, but I tell you, the stocks that are loved when they pull back, there is people who are just willing to buy on the dip, and that's what we see. And if you look at the charts, so much, volume is traded in the last 2 months between 65 and 66. It gave you a shot last night in the 65 handle. I guess you just got to close your eyes, plug your nose, and hit the buy button when it gets in the 65 handle. It would have worked well, and the stock already is back up to even.
B. Morris talking about revenue being down, blaming it on the surface. It would have been hard to pick that 66 number out just right on the nose. You got a pre-market low under 66 at 65.80. The only low that you had in that area was when Microsoft had a big day, 65.45. So might have been holding out for that. You missed it. Since you hit that 65.80, you ripped all the way up, man, to 68.76. That's a new all-time high, trading a new all-time high territory. It's okay. I just don't know if I'd like to see this go red here, and I know that's only 12 cents away. So my number of the day in Microsoft is that all-time closing high at 68.27.
Where is this on market cap land here? It's got to be up there too.
Dennis,
top market cap companies? Where is it? Is it top 5?
Well, did you hear when I was talking with Paul LaMonica yesterday about how I've always been tracking the top components in the S&P?
Yeah.
And I combine Google, right?
Well,
okay.
Obviously, yeah.
Right. Apple, Microsoft, Google, Amazon, and Facebook.
Okay, so Microsoft is not up there, you said?
Number 2.
Microsoft number 2?
In the S&P 500. Yep.
Oh, wow.
Yep.
Well, yeah, so you have Apple. Apple's number 1.
Yep. Apple.
Microsoft's number 2 now?
Yep. And then the combined Google is 3. And then Amazon and then Facebook.
All the big guns up there.
Yep.
So. And Facebook, if you look here, we know they all trade together with the FANG, from Jim Cramer, and Facebook is trading with $1.65, just on the good Amazon, Google numbers here. So that's moving up too. And the other one, Netflix, is trading actually flat right now, so it's not moving along with the other ones. Okay, let's jump over to Intel, INTC. It is one that is actually trading in the red here this morning, but a little bit on the comeback trail as well. They bought the stock ahead of the report, maybe paid up a little bit too much because it is pulling back here this morning. Spencer?
They beat by a penny on the Q1 adjusted EPS at 66 cents. Sales at $14.8 billion, which missed by $10 million. They do see Q2 adjusted EPS at 63 cents to 73 cents, and Q2 GAAP sales at around $14.5 billion.
Stock got the beats, and this one did not bounce back. Not like Microsoft anyways. It's had a little bounce back, though, in the last 20 minutes here because it was actively trading under the 36 handle, and we're back up over 36, and we're trading 36.30 right now.
Yeah, nice range. You did get a chance just before the report. You got a little pop, so you maybe could have sold yesterday's high. Got to 37.50. Pre-market trading got or after hours, 37.60. Yesterday's high was right there at 37.50. On the breakdown, you got under 35.80. Your pre-market low is 35.62, and now you rebounded to 36. This is a tough one. Maybe if it gets under 36 again, take a look. That area of the pre-market low, you had 3 lows, 589, 586, and 585. So anything under 36, I like this. pre-market low 35.62.
Baidu, BIDU, trading down. It was down. Another example of buy the dip working here after hours, because when I actually went and took off to play hockey. I play hockey on Thursday nights, and I took off at 6:30 from when I took off, Baidu was down $10. So it obviously has come back here significantly now. It's down only 3. So here's the stock. Give us the numbers, Spencer, because this stock is on the rebound trail right now.
Baidu Q1 adjusted EPS of $1 versus 86 cents. Sales of $2.454 billion versus $2.44, so pretty much in line there. Q2 sales, they see that at about 2.9 to a little over $3.048 billion. That's in line with the estimate, and their CFO is also stepping down.
BIDU got the beats. Coming back, though. Joel.
Yeah, pre-market low 176.06. Huge bounce to 186 on that. Currently trading 185.40. Keeping an eye on the close, 187.86. That was your close from yesterday. It seems like once this thing has got up to 180, the 186, 187 level, it's really had a hard time holding it. Just going back to the daily chart, you got up to that level in early February. You came off hard. Also back in late December. So keeping an eye right there at that closing price. See if it can get green. If not, could see some downside. Yesterday's low, 182.50.
Our UK trader, Flack UK, is asking, is the time TIME announcement that the deal is off? And that would be correct. So if you go back to the saga from the following time, it was rumored that they were going to sell themselves, and that there was rumors that there was bidders there. This was back when the stock was 14. You can see the gap up the next day when the stock went. I'm just going out to the weekly chart so to actually see the price.
This is going back since November.
Yeah, so it went from $14 and gapped up to over $16. Then it's continued to climb on rumors, and actually the rumors capitulated back when the stock got up to $20.40. You can see back on January the 5th. Nothing has ever materialized. It's always just been rumors. Obviously, they didn't get the price that they wanted. So today they are saying that the board has determined that the company will continue to pursue its strategic plan, but it will not be selling itself. That is what the board is saying. They're not selling themselves.
And along the way, they've rejected an offer for $18 a share. They are said to be in play by Meredith. But like you said, nothing materialized, and here we are.
They didn't get the price they wanted.
All that was for nothing.
Bottom line is they didn't get the price they wanted, and now you can see what happens. And that's why on some of these rumors, sometimes the best thing to do is ring the register. We've saw it multiple times here. We saw it with Kate Spade recently here. KAT had been rumored, going to be selling itself, getting bids.
Oh, look at that. Look at that.
Yeah, stock comes right back down. Here's time, right back to where it came from, and this is interesting. Now it's an interesting setup, because now it's down here at $13, $14. But now that a deal that they're saying they're not selling themselves, all the people who are coming in here for the M&A action are out. So they're out this morning. So it's basically back to where it came from. But, you were sitting on some big profits for a while on rumors. And sometimes the best thing to do is to sell on rumor.
Wow. And back to the area of interest would be the $14 area. That's where it was before the rumors started. You could see the march up there. So, Dennis, you going to employ your old strategy if it gets back to the original area?
I don't know on this one, because they've kind of said pretty bluntly here that they're not selling themselves now. And they sat around here for 2.5 months, 3 months now. No, more than that, 4 months now, trying to sell themselves, and a deal didn't materialize here. So, same thing with the Twitter back in the day. The deal didn't materialize. So, no, and I don't, long-term prospects on Time. I don't know what else they have. I don't follow the company very closely, but, Time Magazine,
I do.
Think about it seems like, it doesn't seem like the future is Time. I don't know.
Well,
so I'm not a fan of the company as a standalone company here. And if they're not selling themselves here, I think I'm out.
I used to work for Timing back in the day. Yeah, I mean, their portfolio is magazines. And that's what they do.
People are reading everything online now. Obviously they probably have a large online presence. I'm sure they're moving there too, but it's difficult to monetize the online, media there. Obviously the magazine is a cash cow, and you can have people pay for the pages in the magazines. It's not as easy online. You want
to hear one interesting fact about Time Magazine?
Sure.
I think I told you Emily is going to Syracuse grad school in the Newhouse School for Photojournalism, and one of her teachers has taken the photo, the cover photo for Time 72 times.
Really?
Yeah. Yep. Yep. So
That's pretty cool.
that and a nickel will get you a cup of coffee, as my dad would say. All right.
Time, yeah, so it looks like deal's off.
What
Just
about
again, this is
Starbucks?
just a lesson, though, that I think, when you're in these things and you're in them for rumors, when the rumors stop or don't materialize there, it can end really ugly. I mean, Twitter went from $25 down to 14, before the last earnings report, giving a little bit of a relief pop. Let's talk Twitter for a second, because you had a
Yep.
2-day move here, too. Almost actually, the candle almost the same as the day before. Low 1576, yesterday's low 1580.
I
We know
know.
we like those double bottoms, Joel, and that would have worked yesterday.
I was waiting for this one to come in a little bit more. I didn't know if it would like fill the gap, but at least I wanted to see if I could get a little, 50% retracement. And no such thing. They bought that thing right off the opening bell. Close strong too. Man, I don't know if we're gonna have to chase this thing up or not. Trade down a little bit in the pre-market. This is a real interesting. It hit 1667 in pre-market after hours trade. This is a real critical area here. As you can see, we got up to the $17 area. This was, I believe, after the last earnings report. That's just a big. It clears 17. You got room between 17 and 18, but
Gap up there,
yeah, this is $17. I mean, if I don't get a chance to buy this on weakness, maybe a break above 17. But the
Hard to
numbers,
chase
yeah,
it
but
now,
these numbers
though.
weren't even that great. I mean, those revenue numbers were punk. So I don't know. This is a tough
Th-
one.
This is just an example of they've been buying some of the dogs. We talked about that. They've been selling some of the leaders, buying some of the dogs. It's kind of been mixed. It was last night was more of a mix, but I think this is just a beneficiary of actually some of the dogs getting a relief pop there, maybe a little bit of a short squeeze involved because there is a few people who are short the stock as well. So I can't chase Twitter up here. I mean, it's all been valuation for me. It's why I haven't owned it all the way down. And now that it's popped another 2 points here, I'm not going to chase it.
Yeah, keeping an eye right there, $17. Nice area. Starbucks gets the beats, huh?
Yeah, Starbucks reported here last night. Spencer, give us the details.
Starbucks Q2 EPS of 45 cents is in line with the estimate. Sales of 5.3 billion versus 5.41 billion, so not great there. Then on the conference call, they cut their outlook for the fiscal year GAAP EPS. It was $2.09 to $2.11. They cut that by 4 cents on the low end. It's now 206 to 210. And the estimate was 213, so lower.
Yeah, they don't like lower guidance.
No, lower guidance
Stock
and
in
in
here a
line
little
earnings.
bit. I have not been a Starbucks fan for the last 10 points higher, so I'm going to limit my comments here because I don't really get why it's trading up here. But anyways, so it's down 4% here in the pre-market.
57.70. That's your pre-market low, bouncing back up into the $58 handle. I mean, just look at this congestion here that you had under 58. I just don't think if we get a break, you see all that volume that traded there between 57.5, 58, might even be a 50% retracement of this whole move as well. Exactly. Yep, it is. 6 and 8 is divided by 2 is 4. You add 4 to 54. That 58. I mean, I'd be breaking in a short there. I don't know if I'd be jumping to try and get this turnaround to go long, but a lot of support here near the pre-market low. Thoughts? We're getting some thoughts here from Brad on CL Clorox,
Colgate.
kind of a slow moving
Colgate. Colgate. Come on. CLXCL. I know they're basically the same company though. CL.
Colgate reported this morning they did Q1 EPS of 67 cents versus a 66 cent estimate. Sales of 3.762 versus 3.79 billion dollars.
They hit the PG. They're hitting the Colgate. This is a risk-on market here right now. We're up here. We're right there at all-time highs here again. And where are we on our bet, Joel? Because I got to be dang close to winning that bet.
Let's talk about
the
Colgate Palmolive chart.
He doesn't want to talk about the bet. This consolidate forever. I've taken the lead from Procter & Gamble, but more so just from the overall market. They're not interested in staples right now. They're not interested in defensive stocks here. So they're interested in growth. Google's popping, Amazon's popping. Why are we going to go buy Colgate? Even if Colgate had an okay report, I think it was going down. So CL, 73.30 the close, stock trading down 2 points in the pre-market. Taking your lead from Procter & Gamble, you've been okay on this one. So sympathy actually did work Colgate trading down at 71.
Just light volume. That's really all I can say. That knocked it down 70, 60. That's your pre-market low. And then you had a gap up in the issue, and that is starts to feel the area of the gap. So you better hold right here. You better hold that pre-market low. The pre-market low is, as I mentioned, 70.60. The low that I'm talking about is 70.58. If not, look out. You could easily fill that gap down to 69.
And just from the chat as well, Dr. J wants to know about Qualcomm. Qualcomm, not earnings, but they did come out with guidance here. Just out of the blue, they are lowering guidance, and that is why the stock is trading down here again. As much as some of these stocks are loved, Qualcomm is one of your hated tech stocks here. It has not performed well in the last 3 or 4 months and has been continuing to get weak here, and it's weak again here this morning. I will say there is people like me that like the value stocks, though, and there's a 4.45% dividend with Qualcomm. As that gets closer to 5, I think people start to get interested, like me, in the issue, and I am interested in it. I like it down at 50, so you're starting to get close to that now, even though it's lowered guidance. I think that there might be some value here in Qualcomm. Spencer, give us the details on the guidance.
They're cutting the Q3 EPS. It was 90 cents to $1.15. Now it's 75 cents to 85 cents, and they're cutting the Q3 sales outlook. It was 5.3 to 6.1 billion dollars. Now it's 4.8 to 5.6 billion dollars. They also said that Apple continues to improperly interfere with the company's deals with contract manufacturers, so that pissing war continues.
That's the problem. You're fighting one of the gens in Apple, and Apple's loved right now, so why are we going to love Qualcomm there? $50 still. I like that number. I think it could bounce there for the first time. I think it could get there today. I don't know what's done in the pre-market here, but I'm just saying I think 50 is a big number.
Yeah, 49.99, and that is your pre-market low.
Holy cow, you just got to be out there. These whole numbers just work, guys.
Backed up.
I mean, it sounds simple. And you know what I've learned here in my 18 years of trading is people who, have crazy, indicators and, are deriving formulas to come up with price. Those people typically don't make money. Some do. If you do, by all means, continue to do it. But what I've learned in my 18 years is that the simpler I trade, the better I trade. And you can say, $50, just a big whole number. It sounds like a grade 2 student can do it. Sometimes that's the best thing. Jeff Mackey, purple crayon. That was the best advice that I've heard on CNBC, I think, ever. The purple crayon, Jeff Mackey. I love Jeff Mackey. If you're listening, Jeff, we love you. But you used to say, always on Fast Money, take your purple crayon and draw a line. That sounds ridiculous. A grade 2 can do it. You want to know something? That grade 2 would make money because those trends work. Those support, resistance, and trends just work. And $50, is just a big whole number. Not saying it's going to bounce there, but it did already once in the pre-market. Maybe it does it again. Always have an out. If you go 50, you buy it at 50. Stock it's getting down to 49.5. It didn't work. But in this case, it would have taken 1 cent of heat, and you'd already be up a point. So it would have worked again.
Yeah, and 50 is just a long-term number. Can't say you could buy it there, and it's going to be a great long-term investment. Bad news, but just go to the – sometimes we like to go a little bit longer term. And look at 2016. Early in 2016, 50 was the level. That was the impetus for the move up to over $70. Now back down there. It's going to take a few days and need to do some consolidation. But an agreement with you here, Dennis, on the $50 level. And you're 13.5 points away in the SPUs from hitting 2,400. It did get to 94.75 the other day, currently trading 23.8650. But we do have a potential double top, Dennis. 88.75 was yesterday's high. That's what we've matched so far in pre-market trading. And Ace is asking about purple crayon. I think you've explained that a few times before. Dennis, you just want to go over that?
No, I did just explain it. I'm just saying, Jeff, so we're just talking trend lines there. And Jeff used to just say, take your daily chart, look at it, and draw your line. And he used to just joke purple crayon. But if you just draw a trend line there, the trend lines sometimes work for bounce areas. They work really well. Stock will trend for a long period of time, especially in a momentum market, and we are trading in a momentum market right now. When stock starts going one direction, it's hard for it to start going the other direction. So it comes up to trend. If the stock's in a downtrend, comes back up to trend, that's your sell short point. And a lot of times it works. If it's in an uptrend, comes back down to trend, that's sometimes your buy point there. And you know what? If it breaks trend, then you get the hell out. But at least you know where your out is by taking that line and drawing your line. So it works well.
All right, we haven't talked GM earnings, and the reason is we've waited for Michelle Krebs. She's a senior analyst at AutoTrader. She's going to join us here and talk about the fundamentals of GM and Ford. We'll do the technicals and the numbers at the top. So hang on, we'll be right back with Michelle Krebs.
All right, welcome back, traders and investors, to Benzinga's Premarket Prep. Spencer Israel here with Joel O'Connor and Dennis Dick. We're on the line now with Michelle Krebs, senior analyst at AutoTrader. Michelle, how's it going today?
Great.
Great. Thanks for coming on. So we have you on in part because GM reported earnings today. They reported a Q1 adjusted EPS of $1.70 versus $1.46. So they beat the EPS number and they came in with some pretty good guidance too. So looking fundamentally at GM, what does that report say to you?
Well, they had a record first quarter, and as you mentioned, topped analyst estimates. Those results, if you look at the revenue, they had record first quarter revenue, and that is largely driven by very profitable trucks and sport utility vehicles. They had a significant growth at GM Financial, which they are trying to grow that entity. Going forward, though, we do know that it's going to be more difficult in North America because we have reached a sales plateau. So it's taking more effort and more resources in the way of incentives to move the metal, and GM will find that to be the case this year.
Was there anything in the report, aside from the fact that we've topped out on the sales cycle, was there anything in the report that you didn't like?
No, and I think GM is sitting pretty in terms of their product portfolio that's rolling out this year. Last year was a big year for them introducing new cars. They introduced the new Chevrolet Cruze and the Chevrolet Malibu. Fabulous vehicles, but in segments that the market doesn't really care about, and so sales of those have been soft, and they've cut production. But this year they are going to roll out a number of sport utility vehicles. The new Chevrolet Equinox is hitting the market. They've got the Chevrolet Traverse, which is a midsize, 3 rows of seats. Those are perfect for the market that we're in right now because that is what is being demanded, especially by the aging millennials who are having kids and need bigger vehicles.
All right, we also had Ford yesterday. They reported 39 cents versus 36 cents, sales of 36.48 billion versus 34.7 billion. We didn't talk Ford a whole lot yesterday on the show, so Michelle, give us your thoughts on Ford's Q1.
Well, Ford had a really tough comparison. Last first quarter was its best ever quarter anytime in its 100-plus year history. So it was, of course, going to be down. Ford had some issues, though. They had a lot of charges related to recalls. They had recalls related to engine fires and door latches, and they had a much higher warranty costs. They didn't specify what those were, but I suspect they were continuing costs related to some transmissions that were not up to snuff. So that's a bit concerning. They also continued investing in mobility companies, and they invested in an artificial intelligence company in the quarter. So that played a part. And Ford has struggled with its car sales, so that is something we're watching. The Ford Fusion freshened up last year, a terrific vehicle, but again, like I mentioned about the Chevy Malibu and Chevy Cruze, not is desirable by consumers. So Ford will have a bit of a challenging year.
And was there anything else, I guess, looking forward from Ford or as far as new products that you're looking forward to from them?
Well, they have a new small subcompact sport utility called the Ford EcoSport. It's a global vehicle, actually. They're finally bringing it to the U.S. That should be a plus for them because we're seeing some growth in that smaller sport utility vehicle market. Things like the Buick Encore have done well. So that will be a plus for Ford. And they freshened up the F-150 this year, some new grills, some new engine variety. So the F-150 should stay on top, as always.
All right, just taking a look here, just real quick, Michelle, I'm just going to go over the pre-market trading action in General Motors. Got a nice pop up to 35.66. The stock had been in a sell-off mode. Looking longer term, though, we see major support developed in the 33 handle at 33.37, double bottom. I'm keeping an eye on the 35.50 level, pre-market high 35.66, but there was two highs right at 35.5. Michelle, I want to talk to you about GM, and my daughter works for one of the advertising companies associated with them, and it seems to me they have some good things in the pipeline here. Some mid-sized cars. Can you talk about that at all? What GM has in the pipeline?
Well, as I mentioned before, they've got this is a big year for them on sport utility vehicles. So they're just introducing the Chevrolet Equinox. That we see great growth potential for that vehicle. They've made it a little bit smaller, more competitive to things like the Ford Escape, the Honda CR-V, the Toyota RAV4. We think that, and it's got really old in the tooth, long in the tooth. So a freshening was in order. So we think there's a lot of growth potential there. They also redid the Chevrolet Traverse, which is kind of quirky looking. It was 3 rows of seats. It didn't get the best fuel economy. They changed the size of that a little bit to be more conventional. And I think that one will do really well. We're seeing a lot of growth right now in the mid-size sport utility vehicle segment. And we think it has a lot to do with aging millennials who are finally having families. They've got kids that have to be in child seats till practically voting age. And so, sport utility vehicles are just far easier to handle with sport utility vehicles. And then GMC's got new, the other GMC and Buick sport utility vehicles built on the same kind of architectures are coming out too. So GM's got a lot going on in the sport utility segments, and those are the most popular. So I expect we'll see some good bumps for GM this year.
Michelle, we're going to hear from Tesla next week, and this is obviously a stock or a company that a lot of people think are going to put major pressure on General Motors and Ford in the future. First, just give us your thoughts here, on what Tesla's doing right now, maybe a little preview of next week's report, and then, talk about Tesla as it maybe pertains to General Motors and Ford.
I'm not in the camp that they think they're going to put pressure on. My thoughts on Tesla are they've always been looked at as a tech company versus an automotive company like GM, Ford, and they're an automobile company as well. And GM and Ford are also tech companies, so they're not viewed in the same way, which is why they're valued differently. Tesla's got some significant challenges ahead of it. It's running through cash. It keeps having to raise more. It's never turned a profit. There was some kind of fallout with their manufacturing executive who's now gone. They've got a critical product launch with the Tesla Model 3, which is their mainstream electric vehicle that's supposed to appeal to a more general audience than the high-end Tesla S. But Chevrolet's out there with the Chevrolet Bolt already that gets really good range and is in that price point. And I think electric vehicles just still have a lot of challenge. The whole fuel sipping segment of hybrids, plug-in hybrids, electric vehicles, still under 3% of the market, an increasing number of competitors from big names, GM, Ford, but also the Japanese automakers and European. So I think Tesla's got some challenges ahead.
All right, I just want to ask you just the driverless car. Who's leading in the race for that? And I just look at the roads and the infrastructure in our country, and I mean, I'd be hesitant about getting in, one of those things under any circumstances. I mean, is it something that Ford and GM are pouring a lot of money into, and they're behind? Nick Shaheen shared something with Google. Came up with something. Where are we? Are we 5 years, 10 years, 15 years, or?
They're out there. There are driverless cars out on the roads now being in test mode. Frankly, the technology has gotten ahead of regulations and insurance issues and things like that. No, I would not say. I would say Detroit's. You're seeing a lot of reports that suggest Ford and GM are ahead. What we have seen is there was a lot of noise about, Apple's getting in, Google's getting in, they're developing all this technology, they're going to be way ahead of everybody and developing driverless cars, and they're out there. I mean, Google's done a lot of work with its Waymo. They just this week announced they were buying another batch of the Chrysler Pacifica minivan to put their driverless technology in, and they're offering people in Phoenix rides in them. So there's a lot of work going on. What we have seen is that, though, the Silicon Valley companies are now looking to traditional automakers to actually make the hardware for them. They're realizing that not a lot of money to be made in that part of the business, and they don't have that expertise. So it's been a bridging of more Silicon Valley with established automakers. But, GM and Ford are full speed ahead on that development. I would say, too, the other thing is there's some reluctance by consumers, like you're talking about, but we are seeing every year that we do studies on autonomous vehicles and technology, we see an increasing acceptance of the idea of them. And I think what Google Waymo is doing in Phoenix is getting regular consumers experience with them. The more experience, the more education people have about autonomous vehicles, the more they will be accepting of them.
Hey, Michelle, I got one more question and we'll let you go. This is a bit of a personal one. I'm in the market for a new car. Okay.
You know how often I get this question.
Yeah, I know. But I'm actually in the market for one, and this is like a once in a decade thing. So what do you recommend?
Oh my gosh. I give a whole test on what you have to fill out my quiz before I will even make any suggestions.
I will. Send it to me and I will do it.
Okay.
All right, thanks. Michelle Krebs, Senior Analyst at AutoTrader. Thanks so much for hopping on today. We'll talk to you again soon.
Thank you.
S&P futures up $1.25, 23.87 Just take the 87.5. Carsat, if you want some numbers, 88.75 was yesterday's high in the S&P futures. We've touched that level today as well, so that's a big number, hitting a lot on the 15-minute. Above that, things open up. Our high for the week up at 94.75. Dennis, where are we at on this earnings bonanza?
We didn't do the Exxon Chevron numbers. So, and Exxon and Chevron have both actually reported here now. Both stocks trading up significantly here in the pre-market. Another example of the laggards getting a lift. And that's what we've been seeing this earnings season, is that some of the laggards, and Exxon Chevron, have had a rough 2017. Chevron started the year up at 118, down at 105. Exxon Mobil started the year up over $90, down at 81.26 yesterday. Both these stocks getting a little pop on their earnings. Spencer, maybe do the combo. Exxon Chevron numbers. Give them to us.
All right, I got you. Exxon Mobil Q1 EPS 95 cents versus 87 cents. Sales at $63.29 billion, so they beat on the EPS number. Chevron reporting for Q1 EPS $1.41. That may not compare to the 92 cent estimate. Sales of $33.42 versus $35 billion, coming in just under the estimate for the sales there.
Exxon Mobil, Chevron, give us some levels here, Joel, as we're popping on both these stocks, but I don't know how excited I can get either. Like, I look at Exxon, I'm gonna beat you to the number. I'm gonna say $84, but it's a ways away from there.
No way.
But you've been in this range between 81 and 84. As you get into the upper 83s, I think you find major resistance. And Chevron, I'd say as you get approaching right around where it's at right now, so 108 area. It's been a lot, so that's where it broke down from just a couple weeks ago. Lots of resistance up here too. I don't know. Hard to get excited to chase these stocks today.
All right. Let's see. Pre-market high is 82.77. High right there, 82.73. Back on the 13. So we are pausing there, but not backing off. Not much at the whole number, but you get above 83 and 4 highs right at the 83, 30, 35 level. You can look at your daily charts. So staying up near the pre-market high, nothing really at the whole number unless you get a big seller. You'll have to look in your open book, but bunch of highs at the 83.40 area. If it goes into reverse, we're not too far from filling the gap from yesterday. Maybe we are. Nope. Yesterday's high in Exxon Mobil. Oh yeah, way down there at 81.30. CVX. Let's see how that's reacting to its report. And that's trading at the high of the pre-market session. 108.20, 108 even is the last print. And let's take a look on the daily charts. Not much at 108 either, but if you can get into that 108 handle, boom, you see a high at 108.74. So we'll keep an eye on that as well. And would you guys talk about holding positions overnight, criteria, and dangers? Dennis, why don't we do that right at the end of the show?
Well, we're getting towards the end of the show here, so we'll give the last earnings report that I wanted to talk about here. And if there's any other report you guys want to talk about, let us know here. But stock we haven't talked about for a while, First Solar, FSLR. That stock just kind of hanging out here in the pre-market, but I believe they reported, didn't they, Spencer?
No.
Do I have this on my list? This is not even supposed to be on my list.
No, they didn't.
All right, strike that from the record. We're going to Sarepta, SRPT.
That one did report, I can tell you. Sarepta reported yesterday their Q1 adjusted EPS of a 60-cent loss versus a 36-cent loss estimate. Sales of 16.3 million versus 13.86 million. So they beat the sales number, but they did miss on the EPS.
Stock is on the comeback trail. The only thing is, this is where we got up to 39.36 is where we got up to that big spike back on January the 10th when we went from the 27 handle up to the 39 handle. As we approached there, I started to get concerned about resistance here. And this is one that I just played all wrong. I had it. I sold part of my position well, and then I held the other, and I sold the rest of it for a small loss, I think in the 29 handle. And here we are now trading up in the 36 handle. I'm like, I should have held it.
37 even. That's your pre-market high. We haven't been up in this area. Boom. Quite some. Yeah, no, we have. We do have a high right there at 36.92. Keep an eye on that. $37. Nice round number. Above that, it opens up to 38.55. So a couple levels. But what's more significant here is the CEO resigned. And there's been some rumor and speculation that this could be a takeover target. So when you kick out the CEO resigns, could be something in the pipeline here for Sarepta. I'm not shorting this
small
thing.
Company.
Yeah,
so,
small company.
Any small company can always be acquired very easily. What's the market cap? Let's look at the market cap of Sarepta. Bringing it up, Spencer. It's a race, but I think I'm going to beat you.
1.9 billion.
Oh no, he did beat me.
Spencer.
1.9 billion. It's climbed.
Yep, and it's even a little bit higher now. Still a small little
company for these monsters if they were to gobble it up. I'm not sure if that's the case. I haven't really heard too many rumors like that, but either way, here's Sarepta getting a lift, and there is overhead resistance though.
I wanted to make an announcement real quick. Something I forgot to mention at the top of the show, but at 9 we're going to play an interview that we aired yesterday at 3 o'clock. This is an interview that a couple of our news deskers did with Andrew Left of Citron Research, and he came out yesterday with a negative call on FleetCor, and we aired the interview live. We're going to re-air it again at 9, so it's about an 8-minute interview. Just a heads up for people, the show will not end today at 9. We'll be going a little bit longer with this interview from yesterday with Andrew Left. Now that we've gotten that out of the way, though, can we get a quick imbalance look?
Yeah, we'll look at the imbalances here. They are pretty small here. Twitter, 106,000 to sell. Maybe some people taking profit taking from the last couple of days. Dow Chemical, 48,000 to buy. That just moves along with DuPont, DD, because they still got the merger on the table there. General Motors, 72,000 to buy. Still trying to hold on to gains, although caution there because Ford gave back the gains there yesterday, so I caution on GM. Nike, 66,000 to sell. That is a trend. We've seen Nike with this early morning sell imbalance for 3 or 4 days in a row, although it seems like it never opens down very much. So it has the morning sell imbalance, but then seems to hold on. That's pretty well it. They're really small today, Spencer.
Thanks.
I want to go back to the chat question though, that we just had, because RD came out and he said, "Do you want to? Would you guys talk about holding positions overnight and talk about the criterion for doing that and dangers?" Well, okay, so this is if you're talking day traders or swing traders or long-term investors, obviously it's a different question for all of them. What I will say is if you were a day trader, an intraday trader, obviously there's risks to holding overnight because even the risk of news. Typically, 99% of your news comes out after hours or pre-market. So during the day, you do get hit every once in a while. You can potentially get hit with news, but for the most part, you don't have a news risk. So as a day trader, that's your first risk to holding something overnight is the risk of news. If you're a swing trader, and this is something that we've talked about on the show a lot of times, is I always want to know when a company is going to report earnings, the scheduled news events, and you try to avoid those usually as best because if you're a swing trader, probably using technical analysis, and technicals, take a back seat as soon as fundamental information comes out there. It doesn't matter how pretty the chart looks. If the stock misses big time and lowers, the stock's going down. If the stock blows it away and raises guidance, the stock's probably going higher, not mattering what the chart looks like. So, as a swing trader, I always want to be, know when the earnings events and know when the scheduled earnings events are and try to trade around those, like avoiding those. Sometimes, you can use those to your advantage, where you get a pre-earnings run up. Sometimes those happen or, a little sell off after an ex-dividend date. Sometimes that happens as well. But, overall, if you're just talking news as a day trader, that's the risk to holding overnight is the risk of news potentially moving a stock significantly from where you were trading it. If you get caught in a news event, and I'll let you go in a second, Joel, but if you get caught in a news event, it's going to happen. Even if you're just an intraday trader, if you're in the game long enough, you'll eventually get caught in a situation where a stock gets halted or a stock comes out with random news. At that point in time, it's kind of like a coin flip. I mean, the news could be good or the news could be bad. So I always say, those random events where you randomly get caught in news in the long run tends to net itself out. So, if you get caught in a halted stock and it falls down 5 points on you, I say, okay, well, yeah, I lost 5 points, but it wasn't really because I'm trading caught in the news event. So it doesn't mean the strategy's no good. It's just bad luck. Good luck will happen to you as well. You'll get caught in a stock that gets halted or you get caught in a news event, the stock will pop 5 points on you. And you'll be like, oh, I'm a hero trader. I knew that. Well, no, you weren't. You just got lucky. So whenever I make 5 points on a random, unscheduled news event, I throw it in the piggy bank and say, well, that 5 points is really not mine. It's going to come back because I'm going to have some bad luck at some point in time, and it's going to fall back off. That's when you're getting caught in random news events. So basically, don't spend the money that you just made those 5 points because eventually through your trading career, you're going to have a time where it's going to move against you as well. In the long run, if you're just trading intraday, and not getting caught in news events and you're trading away from the news, in the long run, that should net itself out. Joel, what are your thoughts?
Just along those lines, the other exposure is, analyst moves, and that's part of the news, that you're talking about, and really, I mean, some firms are more influential than others, so that's something that you got to be aware of, and also, maybe. Starting out, if you wanted to do some after hours or pre-market trading or positions like that, maybe start using it as like to try and exit profitable trades. Using the after hours action. Let's say you came in long, Exxon Mobil in their earnings and. You had a profitable position. So, at least that way you're experimenting, seeing how you're doing, interpreting the price action when you're taking profits as opposed to, going out and initiating positions. We got a minute left here, Dennis. 87 even, quiet, pre-market range. Some of the big Google and Amazon up here. And did you mention the NASDAQ was in the red?
Yeah, which was actually surprising to me. So, props to because I just follow the Qs. I got them in the corner. I don't even have the NASDAQ. I follow the Qs, and I was looking what the Qs are trading up, but Qs is obviously one of the top 100 components. So overall, I guess the NASDAQ futures, Dr. J is saying that they are actually down 3 points here today, which is surprising because you see all these good reports, and you're like, how is that possible? Well, there is some stocks here. I don't know where, so there is some stocks here that are actually trading in the red today. I mean, Intel is down significantly here. You've got some of your other stocks like Qualcomm down significantly. So it's not a great day for every company, although a lot of them are up. But the Qs are trading higher, and that's what I follow, and it's up 0.3% here this morning. So probably getting a lift from Amazon and probably getting a lift from Google as well. But there's some stocks that are weak here today too.
All right, S&P futures, 2 points off that high, 88.75. That's what I'm looking at for continued upside. All right, Spencer. Dennis, we'll let you go.
Yep,
Spencer, we
and
got a little extra segment today.
we have this interview with Citron Research's Andrew Left, of course, the famed short seller who I'm sure you've seen on CNBC. At some point, he came out yesterday negative on FleetCor, ticker FLT. We're going to play that interview for you right now. Can you hear it?
Oh, we got to switch it.
Hey, thanks for joining everyone. On the line, joining us now is Andrew Left of Citron Research. Andrew, how you doing today?
I'm great, thank you. How are you?
Not too bad. Thanks for joining us. So you had a big call on FleetCor today. This is one of your more recent calls. The first call was out April 4th, I believe. On that day, FleetCor shares were down about 6%. Since then, however, stock has recovered a ton. It's recovered mostly all of those losses until today. You put out an updated report on FleetCor. Stock's trading down about 2.5% today. The report today was titled Citron Exposes the Dirty Illegal Secrets of FleetCor. Also, proof the company is already in cover-up mode. You set an $80 short-term price target. That would be down about 45% from here. Why don't you tell us a little bit, kind of stay high level, what are kind of your huge concerns with the company right now? And, you know, specifically you talked about some deception.
The concern is the company is predicated on charging hidden fees to their customers through unscrupulous ways, and the model was simply done by adjusting their fees down 25%, adjusting their multiple down by a little bit, and you can see the sensitivity and put in a model in the report.
Right.
But like everything else, when you have a business that is based on unknown hidden, and in this world right now where information moves around faster, fleet managers can look at these reports, they can look at the concerns, the company is going to be forced to pull it in.
Right, and so in your investigation you talked with, 25 employees or so. They were giving you...
More.
More than
Yeah.
that even.
Spoke to
Okay.
many- spoke to former employees. Everybody validated what we said. There was not one employee
Wow.
or one former who said, "Oh my God, what do you mean?" It depends. That all varied on different levels of extreme.
Right.
Some people said it's a complete fraud, with crazy other words, and other people just said, you really can't trust management. But every single former employee agreed that the whole corporate culture is based on charging fees, using deep learning, using algorithms,
There you go.
using systemic ways to go ahead and deceive customers without them knowing.
Okay, so
And I actually today, in today's report, I put in their terms and conditions, what we all know as the fine print.
right.
But I put a copy of this fine print, and I actually blew it up and let you know that the company can charge you a fee if you pay your bill, not just late, if you pay your bill early, if you pay your bill on time.
If you pay your bill
by
at
check.
all, right?
I'm sorry?
I said if you're paying your bill at all, really, right? There's any variety of
Yeah,
payment.
exactly.
Right.
Exactly.
Okay, gotcha.
If you use your card, there's a fee. If you don't use your card, there's a fee.
That's wild. So you've been in this business for a long time. I remember following you with Stock Lemon. You've seen companies do some crazy stuff. If you could, how would you rank what FleetCor is doing as far as what was revealed when you were doing the deep research that
when you say
appears
crazy,
you did?
it all depends on size. Understand this is a multi-billion-dollar company, with $16 billion company.
Right.
Something of this size, I've never seen anything so egregious. To the point that Morgan Stanley actually put out in one of their defenses that a risk factor to the company is if the FTC speaks to former employees. See how crazy
Wow.
that line is. A risk
Right.
factor to a $15 billion company is if the FTC speaks to a former employee. I mean, it sounds more like you're defending the Gambino family rather than FleetCor.
Is this Sopranos? I think you said, right?
Okay, well, I got my mafia families mixed up, I guess. So, yeah.
Hey, Gambinos, I like them too. So you talked with more than 25 employees. Let me ask you, in your investigation, did any of these employees consider themselves potentially a whistleblower? Were there any who were, wanting to bring this to light?
I didn't know
okay.
that. And if somebody said that they were going to speak to authorities or
Yeah.
have spoken to authorities, I would stop the conversation there. I don't want
Okay.
to know of any government intervention or if it's currently happening right now. I'd rather just sit back, put the information out, and let the FTC and the state attorney generals do what they do.
All right. So let's see. So do you think this will get to the civil realm? I guess what's your conviction there? And I mean, what would need to happen?
I actually personally
Yeah.
believe it has a chance to get into the criminal round.
Oh, wow.
The only difference in civil and criminal in this case is, does the CEO know? Is it willful or non-willful? Either way, there's lawsuits waiting to happen. I happen to think, in my opinion, obviously, through my interviews, through the analysis, that this is something that is completely contrived by management. This did it by chance. There's not a few rogue employees who are jimmy-jacking a system. This is a company who said, we found ways to do this. We know how to go ahead. We know how to circumvent the system with fine print, and in their mind, still be legal and compliant, but keep pushing that envelope to the point where they're not compliant anymore. And that's what I believe.
Right. So what would it take, I guess answer as directly as you can, what would it take to move this into the realm of a criminal case? What would make that a real possibility?
I mean, it takes nothing. When I say it takes nothing, it takes one attorney general, one complaint, two complaints. Just go look at the Better Business Bureau, look at the volumes of complaints. Go look at the FTC and the volumes of complaints that are there. So it just takes one AG to read what I wrote, to read the great work done by the Capitol Forum, and say, you know what, maybe there's something here. How about one former employee speak to an AG or the FTC? That's all it takes.
Wow.
We have a right. When you sign a contract in a business, you have a right, even without reading the fine print, for that contract to go under normal terms of business. So I can't sign a contract and then pay my bill on time and all of a sudden get charged an on-time fee, because that is out of the realm of normal business.
Right.
I don't care if it's in the fine print or not.
Exactly. Wow, you are painting quite a picture here, quite a concerning picture here, Andrew. If anybody out there wants to,
But on the flip side,
okay.
But on the flip side,
Yeah.
because we're all talking about the stock market, I'll give The other side is due.
I like the neutrality
No one's
there.
talking about it.
Right.
No one's talking about
Okay.
it. What a great friggin' business model. Because you could just create. You could just create earnings when you want to create earnings.
Wow. I mean,
If
it's a
you're
good
the
point.
CEO and you say, hey, let's make $50 million, an extra 50 this quarter. Great. Let's charge an administrative fee. What? What's an administrative fee we'll charge? And who can we charge it to? Well, let's look at our clients who are least likely to complain, who have never received administrative fees in the past, or however my deep learning has told me. So you can print money.
Man, Andrew, I like that you stay high level with a lot of your stuff. You drill down into this stuff, but you always got a higher appreciation of what's playing in the market here. If listeners out there want to look at the report, go to citronresearch.com. You can see the report.
Listen,
there.
it takes a long time sometimes.
Yeah.
I see today USANA. There's news on USANA on CNBC. John Fichthorn told people that in China they're looking to arrest the high-level officers of USANA for operating a multi-level. I wrote that exact thing on USANA 5 years ago.
I've been following that for some time for sure.
That doesn't mean. I wrote it 5 years ago. Obviously, it took a lot longer to play out, but I think this will be a lot faster because this is not China, and there's a lot more victims.
You think USANA will be? Say that again. You think USANA will?
I think this will play out. A FleetCor. I think
okay, that's what
I
just wanted to make
the
sure.
Government, because you're dealing with the U.S. government.
So you heard it here first. The FleetCor, I guess I call it a scandal here, will play out a lot quicker than USANA has. Coming from Andrew Left, Citron Research. He's joining us here today. Thanks a lot, Andrew. This has been great. I really appreciate it, sir.
Hey, have a great day.
All right, you too. Later.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.